Street talk with the press breaking the mold. Real talk, straight heat, the channel's go. Hit the subscribe, you don't wanna miss the show. Street talk with the press breaking the mold. Real talk, straight heat, this channel's go. Hit the subscribe, you don't wanna miss the show. Street talk with the press, where the real ones go.
Yo, welcome back to Street Talks, the show where we break down corporate valuations, decode financial strategies, and uncover big money moves shaping the business world. And today, we're celebrating something truly special. Our 100th episode! Woohoo! Hitting 100 episodes is a huge milestone, and we couldn't have done it without you, our amazing viewers. So, to mark this moment, we're featuring a company that knows a thing or two about reaching big milestones. Wilcon Depot. On December 13, 2024, Wilcon hit its own 100-store milestone in Lubao, Pampanga, an entire year ahead of its 2025 target. This achievement highlights Wilcon's steady growth, effective strategy, and strong position in the market. Wilcon Depot traces its roots back to 1977, starting a small hardware store before transitioning into modern trade channels in the 2000s. In 2015, it was formally incorporated in the Philippines and registered with the Securities and Exchange Commission. A year later, on April 1, 2016, it officially began operations after absorbing the retail business of its parent company. Wilcon Depot made a strong market debut, listing in the Philippine Stock Exchange on March 31, 2017. Fast forward to October 11, 2021, the company achieved another milestone. It was included in the Philippine Stock Exchange Index, signifying its influence and stability in the local market. The company was founded by William T. Bello, whose vision transformed Wilcon from a single hardware store into a nationwide leader in home improvement solutions. With an expanding network of stores and a robust supply chain, and commitment to providing top quality in building home materials, Wilcon continues to strengthen its market dominance. Wilcon Depot's business model is built on strategic partnerships, efficient operations, and a customer-centric approach. Its key partners include renowned suppliers and consignees such as Alpha Lux, Hamden, Kohler, ensuring a wide range of high-quality products for its customers. The key activities focus on procuring supplies, logistics and transport, warehouse and inventory management, marketing and advertising, customer service, and financial management. The company's key resources include its skilled workforce, extensive network of physical stores, robust financial capital, and intellectual property assets, including trademarks like Pozzi, Havel, and Verena. Together, these resources support Wilcon Depot's mission to deliver superior home improvement and construction solutions. At the core of Wilcon's business model is its value proposition, which positions the company as the Philippines' leading home improvement and construction supplies retailer. This value is reflected in its diverse product offerings and commitment to quality and innovation and customer satisfaction. Wilcon primarily serves two customer segments: retail customers, who make up the majority of its market, and institutional accounts, which cater to businesses and larger scale projects. To maintain the strong relationships with its customers, Wilcon offers loyalty programs like the Wilcon Loyalty Card and provides exceptional support through its dedicated customer center. The company utilizes multiple distribution channels, including its physical stores, Home Depot and Home Essentials, and its e-commerce platforms, enabling customers to shop conveniently both online and offline. From a financial perspective, Wilcon Depot's cost structure is primarily driven by its operating expenses, which accounts for 92.3%. In terms of revenue, the majority, 96.3%, comes from its Home Depot stores, while Home Essentials and project sales contribute 2.1% and 1.6% respectively. Overall, Wilcon Depot's business model demonstrates a well-integrated approach to achieving market leadership, balancing strategic partnerships, resource optimization, and customer-focused initiatives to drive sustainable growth. Now, let's break down the numbers and see if Wilcon Depot is truly a solid investment. Stay tuned as we dive into our valuation analysis. If you love content like this, don't forget to like, subscribe, and hit that notification bell so you never miss an episode of Street Talks. This is Hazel, and let's get started. Now that we've established Wilcon Depot's strong business foundation, let's talk numbers. A company's financial health is crucial in determining whether it's a solid investment. So we'll be looking at Wilcon's financial statement forecast, which was developed based on historical financial data from 2018 to Q3 of 2024. It is important to note that financial data from 2020 was excluded from the forecasting model due to the pandemic's significant impact on consumer behavior, supply chains, and retail operations. One of the primary factors driving Wilcon Depot's growth is its strong network expansion. Initially, setting a target of 100 stores by 2025, the company achieved this milestone ahead of schedule in 2024. However, rather than slowing down, Wilcon remains committed to expansion. The projected store count is as follows: 100 stores by 2025, 121 stores by 2026, 131 stores by 2027, and 140 stores by 2028. While its Home Depot format remains the core revenue driver, Wilcon is also growing its home essentials segment, offering a more compact and specialized retail experience. Simultaneously, the company will be investing in the renovation of its legacy stores to enhance the shopping experience, ensuring continued brand loyalty and customer satisfaction. With the expansion of its store network, Wilcon Depot's financial performance is expected to follow a strong growth trajectory. In 2024, the company is projected to generate 34.68 billion in net sales, with this figure rising to 54.19 billion by 2028. This growth is primarily driven by store expansions, increased institutional sales, and rising consumer spending on home improvement and construction products. However, sustaining profitability will require efficient cost management. The cost of sales is projected to remain around 60% of the revenue, while operating expenses will account for approximately 26%. Additionally, as Wilcon continues to expand, interest expenses are expected to increase gradually from 687 million in 2024 to 930 million by 2028. From a profitability standpoint, Wilcon Depot's financial outlook remains positive. Net income is forecasted to increase from 2.59 billion in 2024 to 5.12 billion in 2028, reflecting a strong bottom-line performance. Meanwhile, EBITDA, a key measure of operating efficiency, is expected to grow from 7.19 billion in 2024 to 12.09 billion in 2028. Examining the balance sheet, Wilcon Depot's total assets are projected to increase from 42.65 billion in 2024 to 61.07 billion by 2028. This growth is largely attributed to higher inventory levels, continued investments in property and equipment, and new store development. By 2028, PPE and ROU are expected to reach 28.46 billion. Additionally, merchandise inventories are forecasted to reach 22.89 billion to support the increasing demand from new and existing stores. On the liabilities and equity side, Wilcon Depot's total liabilities are expected to rise from 18.62 billion in 2024 to 24.94 billion in 2028. However, the company maintains a healthy financial position, with total equity forecasted to increase from 24.03 billion in 2024 to 36.12 billion in 2028, indicating strong retained earnings and consistent shareholder value growth. Looking at cash flow projections, Wilcon Depot is expected to maintain strong operating cash flows over the forecast period, ensuring sufficient liquidity to support expansion efforts. Net cash generated from operating activities is expected to fluctuate, ranging from 4.45 billion to 12.09 billion annually, as store openings ramp up. Meanwhile, cash outflows from investing activities, which include capital expenditures for store expansion and renovations, are expected to range from 3.1 billion to 3.4 billion per year. On the financing side, Wilcon is projected to use approximately 3.4 billion to 4.4 billion annually to service debt and support business growth. As a result, free cash flows are expected to remain positive, though they will experience some fluctuations due to the timing of investments and financing activities. In 2024, free cash flow is projected at 4.52 billion, peaking at 7.69 billion in 2027 before adjusting to 1.52 billion in 2028 as expansion efforts continue. Wilcon's cash and cash equivalents are also forecasted to remain stable, ending at 4.13 billion by 2028, ensuring financial flexibility for future growth initiatives. With Wilcon's ongoing expansion strategy and continued investment in store renovations, the company is positioning itself for long-term sustainability and market leadership. By ensuring that both new and existing stores remain modern, competitive, and profitable, Wilcon Depot is reinforcing its dominance in the home improvement and construction retail sector. However, its ability to effectively manage operational costs, optimize margins, and adapt to changing market conditions will be crucial in maintaining its growth momentum. Its earnings per share is expected to show significant growth over the forecast period. In 2024, EPS is forecasted to be 60 centavos, with strong growth in the following years, reaching to 1 peso and 10 centavos by 2025 and 1 peso and 20 centavos by 2027 and 2028. Alongside this, dividends per share are also projected to increase. DPS is forecasted to grow from 26 centavos per share in 2024 to 44 centavos by 2028. As we discussed in episode 9, valuation multiples serve as critical indicators of how market perceives a company's financial standing. Price to earnings ratio reflects the relationship between its stock price and its earnings, while price to book value ratio compares the company's market value to its book value. In 2024, Wilcon's price to earnings ratio is forecasted to be 22.5. However, as earnings continue to grow, this ratio is expected to decline to 12.8 by 2025 and further drop to 10.3 by 2028. The price to book value ratio, however, is projected to remain stable at 14.3 from 2024 to 2027 before slightly decreasing to 12.8 by 2028. To evaluate Wilcon Depot's operational efficiency and profitability, revisit key financial ratios previously examined in episode 8, including gross profit margin, EBITDA margin, net profit margin, and return on equity. Gross profit margin is expected to remain strong, starting at 38.8% in 2024 and stabilizing through 2028. EBITDA margin is forecast to slightly decline from 24.9% in 2024 to 21.6% in 2025, before recovering to 22.3% by 2028. Profit margin is expected to steadily increase from 7.5% in 2024 to 9.4% by 2028. Return on equity improves from 11.2% in 2024 to 17.9% in 2025, but adjusts to 14.5% in 2028. In addition to profitability, it is essential to assess liquidity, leverage, and efficiency, key topics we explored back in episode 13 when we first discussed financial stability indicators. Current ratio, which measures Wilcon's ability to cover short-term liabilities, is forecast to fluctuate between 1.8 to 2.5. The net debt-to-equity ratio remains low at 0.3, suggesting minimal financial risk even with planned expansion. Asset turnover ratio, which reflects how efficiently the company generates revenue from its assets, is expected to improve from 0.86 in 2024 to 0.92 in 2026, before stabilizing at 0.89 by 2028. In the next section, we will shift our focus to valuation, where we will compute Wilcon Depot's intrinsic price to determine whether the stock is a buy, hold, or sell. Stay tuned! We use the discounted cash flow method to project Wilcon's future free cash flows and discount them to present value. To ensure consistency in our evaluations, we rely on the following assumptions. Risk-free rate is at 5.88%, equity risk premium is at 6.87%, asset beta is 0.43, long-term free cash flow growth rate at 3.19%, which is based on a long-term revenue CAGR of the DIY and hardware industry. These values serve as the foundation for estimating the firm's weighted average cost of capital and discounting future cash flows. Wilcon Depot's free cash flows are projected as follows. In 2024, 5.27 billion. In 2025, 5.68 billion. In 2026, 1.91 billion. In 2027, 9.50 billion. And in 2028, 3.76 billion. In addition to these projected free cash flows, we determine the terminal value of 75.25 billion, representing the firm's value beyond the explicit forecast period. We also discount the free cash flows. In 2024, discounted cash flow is at 4.87 billion, 4.85 billion in 2025, 1.5 billion in 2026, 6.9 billion in 2027, and 53.02 billion in 2028. By summing the present value of operations, we arrive at a firm value of 71.15 billion. Additionally, Wilcon Depot holds 1.87 billion in non-operating assets, bringing the total value of the firm to 73.01 billion. After a net debt of 9.89 billion, we derive the equity value at 63.13 billion. Dividing the equity value by the total number of shares outstanding, we calculate Wilcon Depot's intrinsic price per share to be 15 pesos and 40 centavos. With an intrinsic price of 15 pesos and 40 centavos, Wilcon Depot appears to be undervalued relative to its projected closing price of 14 pesos and 30 centavos in 2024. This suggests potential upside for investors, assuming the company meets its forecasted earnings and growth expectations. And there you have it. After crunching the numbers, dissecting the forecasts, and putting Wilcon Depot under the valuation microscope, the results are in. It's a buy! With a fair value of 15 pesos and 40 centavos and a current price of 14 pesos and 30 centavos, Wilcon Depot presents a 7.13 upside. Not exactly a home run, but a solid, steady gain for investors looking for long-term value. Wilcon's financial strength, stable profitability, and efficient operations position the company for sustained long-term growth. However, as with any investment, macroeconomic conditions, market sentiment, and execution risks must be considered. So whether you're a cautious strategist or a bold investor, the numbers suggest this stock deserves a spot on your watch list, or better yet, in your portfolio. And that's a wrap on episode 100 of Street Talks. A huge shout out to our official partner, Easy Money Consultancy, for valuations are as easy as 1, 2, 3. If you enjoyed this ride, don't forget to like, share, and subscribe to keep the momentum going. Here's to the next 100. Cheers to smart investments and street smart conversations. Till next time. Bye-bye.
Go and talk to Michigan, you're a street talk with the press.